Hey everyone, and welcome to the Love America Hate Taxes podcast. I'm Ryan, and this is Don, and today we're going to be talking about the House Resolutions Bill 14. I think I said that right for that, and it's actually pretty important. So we have some updates regarding some services that we use here with our company, but there's some other things in this bill as well. But this is a pretty significant bill because it's going to do some things like potentially extend some 2017 tax cuts that we had, affect the R&D what we were just talking about, and we're just gonna unpack a little bit of that for you today.
Yeah,
So,
so ultimately, when it comes what happened last week in the
mm,
House is they passed the Senate amendment.
mm,
The amendment so find out more and more about politics. Remember, Schoolhouse Rock, I think is what it was at the time.
barely,
That big,
yeah,
yes. What happens with the bill, all that kind of
on
stuff.
Capitol Hill, yeah.
Yeah, okay.
Mhm.
You was singing for it?
No, yeah, I didn't know
Uh,
that part.
but ultimately, there's a process. So the House passed one earlier this year. I think it was like a 47 trillion, or no, I'm sorry, 4.7 trillion. Sorry, just joking. 4.7 trillion dollar package. It went off to the Senate. The Senate has to approve it or amend it. So what happened is it went to the Senate. They made some changes. They amended it and sent it back to the House. So the House has to approve it so that they can get by with a simple majority when it goes back.
Gotcha.
Because if they don't pass it, now you get into the horse trading, the wrangling that goes on.
Mhm.
But it's very, very important. So, a couple things that were important in here to keep in mind is by passing this last week, it frees up the House and the different committees, both in the House and the Senate, to get the Tax Cuts and Jobs Act legislation fixed. So
Mhm.
what happened is in the Senate bill, actually, it states there they want to make it permanent. So they gave authorization for it to become permanent, which is good news for everybody out there. And I'll give an example of what will happen if you don't, or pardon me, if they don't. So it just allows them to say, okay, here's the guidelines. This is how much budget you have. This is how much in tax cuts you can do. And so go to work and stay within these boundaries. That's pretty much what it's all about. These are your boundaries that we've decided that is okay. Go ahead and build it out from inside there. And then what will happen is it'll go to committee, it'll go for vote, then it'll come out to the floor votes on both the House and the Senate for final to go to Trump for his signatures. Now, this is that big, beautiful bill that President Trump has been talking about.
Mhm.
He's encouraging the House and the Senate to get it done because inside there's some other things like the military defense, there's border security, there's a lot of things in addition to just the Tax Cuts and Jobs Act, but this is a tax conversation. So we're going to talk about taxes, if that's okay.
Absolutely.
One of the big things that actually Trump had in his speech that he had when he presented to Congress not too long ago, he actually mentioned this here, and it was about how to help manufacturing. And a lot of people may or may not know who are watching this here, but what happened in the end of 21, one of the provisions or a couple provisions of the Tax Cuts and Jobs Act expired.
Mm.
One of them was the accelerated depreciation on purchase of equipment. It used to be 100%, then went down to 80%, down to 60%. That's number one. And that a lot of businesses who sell equipment, sell things, experience a slowdown because of that.
Sure.
And of course, the taxpayers end up paying more taxes and such. So that was one. But the one that's, in my opinion, one of the most prevalent, in particular with our clients, is research and development credits.
Yeah.
So that one there also at the end of 21 expired, and that means that you had to start expensing or amortizing your expenses. You could not expense it all in one year. You had to amortize it over 5 years, which has been extremely painful to people out there who are taking R&D businesses, small businesses.
It was a very much, pay your taxes now, get the benefit later type thing.
Pretty much, yeah. I mean, we had somebody referred over to us who did the technology for 911 centers up in Virginia. He spent in 22, he spent $1 million on upgrading their software.
Mm.
Well, he wasn't aware of this here, that this happened. He goes to his tax preparer in 23 and says, "Hey," this CPA says, "Hey, you owe an extra $300,000 in taxes." He said, "What? Why? Why?" He said, "Because of this amortization, because you can only use 10% of that expense as a deduction. Everything else you had to show as income."
I know. Imagine almost having to take a loan out to pay taxes.
Well, that was the thing, and that's what the guy said. He said, "Listen, interest rates have just skyrocketed.
Yeah.
If I have to go out and borrow this money, or I have to pay penalties and interest with the IRS." So it put people on the catch 22. So back in February, I have a very good friend who's a congressman from the great state of Texas. He's on the House Ways and Means Committee. I sent him a message. I said, "Hey, Nathaniel," I said I gave him an official letter saying that how making this retroactive, this legislation to work on here back to 22 would help spur the economy because it's going to allow businesses to recover back what they overpaid on taxes because of amortization and be able to put into new hires and more R&D and more growth, which is going to, it's kind of like sowing seeds. You got to sow lots of seeds to be able to get growth. Well, that's going to give them the cash to be able to do that. I can't say that that had any bearing upon the bill. Matter of fact, I can feel pretty confident it did. But in March, the American Innovation and R&D Competitiveness Act of 2025,
Mhm.
the House brought out, and Nathaniel is one of the co-sponsors of that. So it's actually making these things back retroactive,
That'd be more.
which is going to help a lot of businesses out there. Now, what's going to happen is, there's no certainty in Washington, unfortunately. It's going to go. Now, we feel like there's a strong chance of this happening. Why? Well, let me give you both sides of that. Because last year in January, remember, we've done a lot of discussion about this. The House passed this, ultimately the same thing, 357 to 70.
Mhm.
Went to the Senate and it died because of the elections were coming up and the GOP, what I was told by one of the offices of the Senate Finance Committee, won't name who, but they said that they would be committing financial malfeasance
Mm.
if they went ahead and signed off on it because it gives them no bargaining
Sure.
power.
Yeah.
Well, now that the GOP has the House and the Senate and the White House, less of an issue. So I feel very confident that this one here has a strong. Now, we've heard rumor that they may say, listen, if you have $50 million or less in revenues,
Mm.
then you can
Go
go back
go
and
back.
amend your returns and go back retroactively.
Yeah. Better than
All of our clients are going to fall in that
better
category.
than nothing, that's
Yeah,
for sure.
because of the big corporations, you got to think about these big corporations, that spend hundreds of millions of dollars every year on R&D. Yeah, it was an unpleasant surprise. Matter of fact, there was a lot of heat from the industry, from the AICPA and some other ones out there that were putting a lot of pressure on Congress to get this rectified. So,
Yeah.
all that being said, now let's talk about what the battle we have
Mm.
is. They're talking about the deficit, which is very, very high. The
Mhm.
debt is very, very high in our country, and just knowing how much that would impact this whole budget bill is going to be the thing that they have to look at. But like I said, they maybe put some limitations of $50 million or something like that on there.
Yeah.
But anyways, just a little side note: reach out to your senator, your congressman, tell them to vote specifically for the American Innovation R&D Competitiveness Act of 2025. So if you're a benefactor or you have friends who are benefactors of R&D, a conversation with your senator or congressman or congresswoman would be a great decision.
Yeah, absolutely. Kinda circling back around to the increasing the deficit, but, you'd have to think, though, I mean, yes, it's gonna I think the estimate was potentially, like, 5.7 trillion was what potentially it would add.
Senate, yeah, what the Senate brought.
So, but you gotta think about if the jobs are created and innovation grows, it's gonna put money back into the economy as well. It's kind of a little bit of a give and take with it, so
Well, that's the thing. My
yeah.
my my buddy in Congress, he said, what happens is when they're looking at all these numbers, the Congressional Budget Office, the CBO, is generally does not look at what the economic impact this will have.
Mm,
They're looking at the expense because I don't know if they just can't quantify that or what the deal is, but they don't look at the offset. So we're gonna spur more growth over here,
mhm.
and that's gonna create more taxes that helps offset that.
Yeah, yeah,
But I will tell you this here: they're gonna have to be very serious about this. President Trump has been talking about China and all these other countries on the tariffs and stuff. R&D, if unless it's changed, I think it's 45%
mm,
credit in China to do
yeah.
R&D.
Wow. Blows ours out of the water.
Way out of the water.
Yeah. So real quick, let's talk about so if this tax cuts, if it does not get extended,
Oh yeah.
what's some for just your average American business owner taxpayer, what are some other things that might happen if it does not get extended or what could happen if it does? So,
Yeah. So let's talk about if it doesn't. So I'll give you a prime example. I did an analysis on a prospective now who's become a client, and we ran through there, and his tax liability for 2025
mhm.
is about $100,000.
Sure.
We went ahead and let the numbers transfer over to 26, and with all the provisions expiring, because that's the way our software works right now. he's going to pay an extra $40,000 or 40% increase in his tax
Oh
liability
my goodness.
just because the tax law expires.
Expires.
Yeah, this is not R&D. This is just running a business. You look at losing a lot of opportunities, like the QBI deduction, which is a 20% reduction of your income. You don't have to pay taxes on things like that.
Do you have $40,000 extra lying around? I don't think so.
Yeah, that's painful. That would be very, very painful. So, and the House Ways and Means Committee sends out emails to me every day. How what a negative impact that will have upon
Mhm.
not just business owners, but individual taxpayers as well, because child tax credits are issues and so on and so forth that will expire at the end of this year if they don't get it
Will the
fixed.
child tax credit be in this bill as well?
Yes, it will.
It will be?
Yeah.
Okay.
Which has been a sticking point the last two times that they tried to fix this, has been the wrangling between the two parties on the child tax credit. But again, now that the GOP is a majority, and I'm not here being political, I'm just saying because you have a majority in all the house in the House, the Senate, and now the White House, it's going to be a lot easier for that to flow and get fixed.
Gotcha. Well, we'll keep you updated on that. Don, any final closing comments on this?
No, I would say that most people probably don't pay a whole lot of attention what's going on in Washington. But if there's ever been a time to be in contact with your congressman, congresswoman, senator, this is a good time to reach out to them. I mean, they ultimately are to represent their constituents, and knowing that it's going to impact not just the business owners, small business owners, but the individual taxpayers. That's huge because, like this client I was talking about, a 40% increase in his tax liability in 1 year, if he does nothing differently, if everything's exactly the same that he did in 25, and that's a shame. That's $40,000 some people pay for the year. So,
Absolutely. One more point to get a tax planner uh, to prepare for those things in both scenarios to give you what happens if and what happens if not. So that would be really good. So, guys, hopefully you enjoyed today's podcast. Hopefully the information was really good and you found it valuable. If you did, like and share it on whatever platform that you're watching this on. Share it with a business owner, share it with a friend. And if you have questions, comments, you want something answered, send them in through email. We'd be happy to get those on our next podcast. But in the
absolutely.
meantime, we'll see you next time.
Thanks. Bye-bye.